Good afternoon, all. Ira Epstein of Linn Associates with your agriculture wrap-up, and this wrap-up is for Thursday, and we are now at the 30th of April, the last trading day of April, the last day of the month, and this is 2020 and the time about 3:35 in the afternoon. Big update today in the beans. You know, we had smelled here, we were talking about it day after day this week, you had lost that downside momentum, and was that 830 area going to be important? Well, it's turned out to be. You're back to 855. Wheat market up today, corn up. For the month, we saw that China's bought, 1 million metric tons of soybeans, 10 cargoes to be specific. Pretty good number, not stellar and mind-blowing, but they are buying, and the word is they're going to continue to buy. We saw cotton come alive. We saw the coffee market turn around, the cocoa market turn around. Was it month-end squaring, or is the market saying maybe the worst is behind it? Could be, not impossible. And we're getting nice rallies in the energy market, and they're holding. When we take a look at the soybeans, we can see how the prices went down, and now for the week, we're up 18 cents. Now, the week is not over. The month is over, but not the week. But we'll see how the market finishes this week out. It did make the deepest break that it had last week, as you can see, down to 808. The market started turning around, and from that, we've come back about 42 cents. So that's not very bad at all. When we take a look at how the market is right now in the daily bar chart, you can see that we're challenging this upper range. This was the bottom, that's the upper part of it, and we're now challenging that number. With the swing line, we had a different pattern. When you look at the swing line prior to today, you had lower highs, lower lows. What is the number you cannot take out if you're going to keep that downtrend? 846 and a quarter. That'll break the pattern, and that's what happened today. So the pattern at the end of the day is one of a lower low, higher high out of that phase of the bearishness for the time being. Where's the battleground? I'll continue to say it's the 18-day average of closes. Now, the market finished over it today, so that gives the bias up. It can hit it easily again tomorrow and be playing right there. What else? Well, Bollinger Bands, they're fairly far away, up at 871. But if the market were to launch itself, that would be the number I'd look at. That from here, 16 cents away. You were up 17 cents today. So it's not that it's not in play. It is in play as a resistance point. And momentum turned up. So I have the bias up, momentum up. The market's had a successful test down here. That's not to say it's out of the woods, but the market at least ended a bear phase. In the meal market, yesterday, you hit, watch this, the lower Bollinger Band. One of the things I say is that the first time you hit a band, especially when you haven't hit it in a long time, I am expecting that band to act as the support for the pros that are in there that are short that want to take money off the table. That does not mean they're going long. That's where I expect them to come out of the market. Today's action doesn't look too bad, does it? Now you ended this phase. You took out this high, so now you have a higher high, lower low, another successful test of those lows right there. And in the soy oil, you got up high enough today to take out this last high, so we've got a lower low, higher high pattern, which is no trend, and momentum is turned up. So the soy complex at month end came alive and ended a bear phase. I don't know if it's begun a bull phase. In the corn market, the challenges this week to the lower Bollinger Band look as though we weren't wrong, or I wasn't wrong when I was saying I think the pros are coming out of the shorts right there. I still think that. And I look for the resistance up at 325 and 3/4, but there is a but here. Because the reading is still oversold with these numbers under 30, I don't expect pros to go short in oversold conditions. I think they're observing. How's that for the word? Wheat market, I still think this is where the pros are coming out. But the difference in this pattern, and I want to show it to you, is this is called riding the slow stochastic. Why? Because you're not getting away from it. You keep hitting it. You want to see when the market eventually leaves it. It's hit it now, what? almost 5 days in a row, 4 days in a row for sure. I don't know if it hit it on that day. That's called riding, and you have to recognize when that happens, it's still a sign of a lot of bearishness in the market. However, it is oversold. The first challenge of it is still where I think pros took some money off the table, but they're looking at this one hard. It is oversold enough where I don't think you're going to get people jumping in down here. Sugar market finally rallied enough to give the first signal in a while that it's not staying in the bear pattern. It widened out the trading range, but today ended that. You now have a pattern with today's high of a higher high and a lower low. So 1023 would have been the number that ended that pattern, and that's what I think happened. I also think that the professionals were out of the market right here, not down there, right over there, and they're just observing. Coffee market. I was looking for a challenge of this low. It's still very possible. Why? Because you got the embedded reading. Until that's lost, the rallies that come back in this market, I think, are still being sold by the pros. In the cattle market, you went up today, got up to 86.85, didn't quite get up to the upper Bollinger Band. There's room to get there. The trend turned back up here. You've got the higher low, higher high. Now, the problem I have is this narrowness that's come into these Bollinger Bands. When you get that narrow, it's rare that you really follow through dramatically to the upside. Can it happen? Sure. In order to break the uptrend, you've got to take out today's low, and that number was 83.52. So the market at least ends the month on a very positive note. In the hog market, back up to the upper Bollinger Band. Overbought. I think the pros came out the first challenge of it. I don't think anybody's jumping in to get crazy right here, but they could. You know, you don't know. We've got the higher low pattern, higher high with today's action. What would break the uptrend? Taking out 54.77.5. That would then give you a pattern of a higher high and a lower low, or potentially, if you don't take this out and you just took that out, lower highs and a lower low. Either way it goes, I can't get a sell signal unless the market were to close under the 18-day average of closes. But interesting day, interesting end to the month. I want to remind you that I cover these markets in great detail, and a lot more of the ag markets and all the softs in my morning subscriber video. I don't know that I'm going to continue doing, at the end of the day, these end of the day ag videos. It's our lowest viewership by a lot. When I say a lot, everything blows it away 3 to 15 times over every day. So if you're interested in keeping up with what I'm doing here, I doubt these are going to stay. So you'd be best off where I really cover it in detail every morning, and that's in the subscriber video. So www.iraepstein.com, under the word research, fair warning, when these disappear, and they're going to, this is where you want to be, and it's going to happen soon, very soon. Fair warning to all. For $7.95, give it a try and see if you like it. I'm Ira Epstein. You have a great day, and I will talk to you all tomorrow. Take care.